While watching bullish price actions, let us inform you our review on MSPR. MSP Recovery Incorporated, doing business as LifeWallet, just pulled off one of the more dramatic pivots we've seen in the healthcare data and reimbursement space, and investors are definitely paying attention. The stock rocketed up 135% in late after-hours trading Thursday and carried that momentum into Friday, finishing the day up about 95% with over 87 million shares traded. This wasn't just a spike, it was a full-on market reset based on a real shift in fundamentals. So, here's the deal. LifeWallet's core business revolves around identifying and recovering improper payments across Medicare, Medicaid, and commercial insurers. It's a tech-driven operation built on a database of historical claims and over 1,400 proprietary algorithms that pinpoint waste, fraud, and abuse. It's a strong value prop, but for the longest time, the company's potential has been buried under a massive liability problem, namely a $1.2 billion mountain of debt. That liability? It's gone. In a sweeping restructuring, MSP struck a deal with Hazel Partners and Virage Capital to eliminate that $1.2 billion in debt. Virage agreed to convert its claims into a 43% equity stake in the company, effectively wiping the slate clean. They're releasing all related liens, which is a huge confidence boost for investors who've been wary of the company's tangled financials. It's not just debt relief, it's a fresh foundation. But what makes this even more interesting is the operational shift. MSP is creating a new independent servicing entity, funded by Hazel with up to $25 million in operational capital, that'll handle all recovery services going forward. This new servicer won't be controlled by MSP, but it'll run on MSP's proprietary technology and data systems. MSP retains full IP ownership, licensing it out to the new entity, so they stay in the value chain without having to carry the operational burden. This move should drive real efficiencies. The company expects to save about $5.6 million annually in operating costs while enhancing the recovery process through a more focused, scalable platform. Plus, having an independent CEO and board running the new servicer, alongside oversight from Hazel, adds some much-needed credibility and governance structure that MSP has arguably lacked. On the funding side, Hazel is also stepping in with an additional $9.75 million in bridge financing, of which $6.5 million remains available through July. MSP is also backed by further financial support from its principals and capital facilities like Yorkville, which just extended debt maturity to late 2026 and loosened restrictions on stock sales. That provides more room to breathe and more flexibility to raise capital when needed. Now, what does this all mean for investors? This isn't just a PR boost or quick cash grab. This is real structural change. The debt relief gives MSP a chance to focus on what it does best, claims recovery, without being constantly weighed down by legacy financial issues. And spinning off the recovery operation into a new, well-funded, independent entity could finally unlock the performance their tech has been promising for years. That said, there are caveats. The equity dilution from Virage's 43% stake isn't small, and there's still execution risk. This only works if both entities actually deliver on their goals. The Yorkville facility also means MSP could continue raising cash through stock sales, which could put pressure on the share price over time. But overall, this is the most significant and arguably most promising turnaround effort MSP Recovery has put forward since going public. It's a high-risk, high-reward story for sure, but for the first time in a while, there's a real path forward. Investors are clearly betting this isn't just a restructuring on paper. It's the beginning of a meaningful comeback. Please subscribe, give the video a like, and watch more from our playlist. Thanks.